Good morning, traders. This is Joanne with Succeed in Forex. As you all know, this is non-farm payroll day, so we have a lot of things coming out today and some interesting trading. We are going to be starting out with the news that came out earlier this morning from Switzerland, and then we will discuss the non-farm payroll numbers and how they affected the market. Earlier today, out of Switzerland, the news headlines read, "Dollar pressure prevails ahead of payrolls data." Within crude oil futures, prices are retesting the $100 a barrel price, and the U.S. dollar remains under pressure to the downside. The euro dollar traded to 147.80 and has since settled down to 147.25. The ADP report of private payrolls announced a 40,000 jobs created in December, following a revised increase of 179,000 in November. This may point to a cooling in the labor market and a sign that the economy is not creating new jobs. Jobless claims came in at 336,000, which was better than expected, but it was down from 350,000 the week before. Today we are awaiting the non-farm payrolls for December, and the consensus is a 70,000 gain. However, some of the major banks are forecasting a below-than-expected number of 50,000. The numbers have come out since then, and yes, it was well below that at 18,000. The fourth quarter Bank of England credit conditions survey was released yesterday, showing an expected downgrade in the credit market. The report showed lower lending to households and a spike in secure and corporate lending spreads. For this reason, investors forecast a 100 basis point easing in the British interest rates in 2008. All right, let's go on to the non-farm payroll report. The report is a reminder that the recession may already be here. It shows a combination of bigger than expected jump in unemployment rates to a 2-year high and eroding job creations. The hourly earnings slowed to 4% from 5%. The report suggests some negativity in the U.S. stocks, which would be positive for the yen across the board. The non-farm payroll report is in line with the December ISM report, which fell below 50, registering declines in new orders and productions. We talked about that earlier this week. The most resounding sign of weakness in this report is the 24,000 loss in retail jobs in December, a month known for strong hiring. This suggests that retailers are aggressively discounting to stay afloat and have reached their profit margin to the extent that they are cutting the workforce. Just one more observation for today, that despite the sharp sell-off in equity futures, analysts are not seeing a considerable unwinding of the carry trade or equally considerable decline in the dollar as traders are hesitant to extend risk reduction trades ahead of President Bush's conference, which has a potential to reverse sentiment. You may recall the last Bush conference, which was on December the 6th, the day before the release of the November payroll report. It announced the plans on freezing rate resets on subprime mortgages. Well, that concludes our news for today and for the week. We hope you've had a profitable week and what we have brought you will be helpful in some way in your trading. We would like to invite you to join us at our website at www.succeed.com and also with our Yahoo forum, which is also succeedinforex.com. Have a great weekend, and we will see you next week for another great week of trading.